everybody, welcome to the Trading Market Technicals morning call video for Friday, October 11th. Explosive move to the upside, Dow up 323 points, Nasdaq up 82, S&P up 36, and the Russell up 26. A lot of the important indexes have recouped or regained their uptrend line or the 200-day moving average, and this would be the Dow Jones. But we did have a big move up. Yesterday morning, I showed you in the morning call video about that we are expected to move higher. The indicators were showing that, and that is why sometimes the indicators, if you follow them correctly, can really give you a great hint. And we're just going to go over those indicators to show you where we are after the close today. But nonetheless, we did get a big move. That is really a short covering rally. There's some buying in there, but mostly there was a lot of shorts in the market. Don't forget, we were down maybe, I believe it was 12 out of 14 days or 13 out of 11 days. So short term was extremely oversold, and logically we are due for that bounce. Now, the day trading part of it is gets a little more complicated. When the market's down, they gap lower and just grind lower all day, and then you get to a point where now you're 3, 4, 5 days into the downturn, and now the risk reward is not as great anymore because of the fact at any given moment the federal government could come out and say something like they did, that they're maybe pushing the debt ceiling off for 6 weeks, and again, further kicking the can down the road. And Wall Street likes that. They don't like uncertainty in the market. So that's what happens. And if you were short or getting short, you really got hurt yesterday. Another thing is that the markets are made to fool the masses. You have to understand the dynamics of the market. And as the market continues to grind lower, you know, you have a lot of the novice traders, a lot of people that are not so keen on what's going on and how the market works, and they keep getting short and keep getting short. So now shorts had to cover. A lot of shorts got hurt yesterday, and maybe we get follow through today. And I'm going to I have an idea of what's going to happen here. I'm just anticipating, you know, again, nothing tradable on this, but I do think today we get some sort of choppiness to maybe a slightly up bias, and then Monday maybe some follow through, and then we'd have to reevaluate it. Because why? Because that's when the market comes in, and a lot of the bigger players, they know this. The market comes in, everybody starts getting back on the long wagon, and then we come into some key resistance, which I'm going to show you in the chart segment, and boom, we go down again. And that's where now the traders who were short had to cover. They go long right into resistance, and one more time we get the flush. And I do think that we get the flush at least one more time because of that analogy that I just brought up. I do think that the markets are ready for a move higher, and this is what I was anticipating. The indicators had told me that, and now we're looking for a push into resistance, maybe a little bit more, get everybody back on the long side, and then the markets fail one more time into the seasonal time of weakness that we're in. And that really kind of ends at the end of October, first week of November. Now, that doesn't mean it has to happen. The markets can continue to run up and take out the highs. But that is what I'm anticipating. I'm not going to be positioning myself for that. I'm going to just follow what the trend is and follow what price is telling me. Now, today, obviously with a big move up like that, a lot of times the markets need to digest that move. But that doesn't mean that you can't find quality stocks, good stocks on pullbacks, buy them for a trade. Again, won't be looking for short plays unless you're shorting really relative weakness to what the market is giving you for that day. Okay, hopefully that helps a little bit. Did get a couple of emails, saying, "What do you think? What do you think?" You know, I'm short. Well, you know, again, risk was to the upside. You know, if you're short, you got to be very, very careful. The risk reward isn't there, especially when the markets are down so much. You know, for a trade, for a day trade, sure. If you want to take it for a day trade with a tight stop, absolutely. But you know, for swing trading, and a lot of people do swing trade, very difficult because. Again, if you are swing trading, I look for quality stocks. I want to buy quality stocks on pullbacks at discount prices. And then when a market rallies like you had yesterday, you're going to have an explosive move, and you're going to have a big equity curve in your account. So just, you know, keep that in mind. Chasing the market is the worst thing that anybody can do. So let's not chase. We want to make sure that we want to buy into the market when it's time, and we want to short the market when it's also time as well. All right, McClellan Oscillator. Yesterday I pointed out here. I said, okay, guys, we're outside of the Bollinger Band. I'd be looking for a move back into the Bollinger Band, back into this neutral territory. Sure enough, We got it. That was one of my hints that we were getting some sort of a bounce. Now, we were outside the band. We could have been outside the band yesterday in the morning and continued, and then today we could have popped. That doesn't mean that it had to happen just because you're outside the band. We could follow through like we did here and then rally. So, but again, that was hint to me that if you wanted to, you could have been legging into, a put credit spread. You could have been legging into a directional call option, or just buying you right out the stock if you wanted to, slowly as when and if the market did turn. Okay, so now let's take a look at the stocks above the 50-day moving average. Again, I said here yesterday, in this area, this 25 to 30 percentile is where we have logical spots for bounces. Stocks above the 50-day moving average, again, if you look at here, this is way low here. This was that June 24th low. But if you looked at here, here, and here, we're in this area for a bounce. We were looking for the bounce. Not to say that we were going to get one at that time, but we were looking. And when the markets did gap up and ran, this was the cue to say, okay, markets are going to bounce today. And sure enough, that's exactly what happened. Biggest part of it was the VIX. And I'm always watching what the VIX does. Always. The VIX and the tick is very critical on what on getting your analysis right during the day. And, of course, end of the day homework. We had the big move up. We did close outside of the band. And yesterday, I said, okay, if we close back in it, but we did. Not only did we close that, we gapped lower and continued all day lower. Okay, great little trading strategy is if you wanted to trade the VIX via the S&P, anytime you get this oversold or overbought, remember, big mutual funds, they can't short stocks. They want most of them are long funds only. So in order for them to hedge, they don't care what price the VIX is. They would just buy it up in this area where you and logical traders are not going to do that. So that's what happens. They push the VIX at extremes, and this is where your cue as a trader would be to short this area here. When I mean short, I'm not saying just going out shorting the volatility, meaning the VIX or the VXX or any volatility instrument. You could have just been out starting to buy the S&P or any ETF or any stock actually to know that you would be coming in for a long play for the next day. So excellent analysis yesterday. We had a real good analogy of what the market was doing. And here was also the tick, the end of day tick reading. I said if we usually get it 0, we usually get that bounce play. And as you can see, if you look at all the times we hit 0, we got that bounce play right away. Now we did it. We got it here. Let's see what happens today. We get some follow-through. Now, remember, guys, we had a big move up. It would not surprise me if the market was down 30, 40, or 50 points today. That's logical. That's healthy. I wouldn't want to see the market down 200. If it took back most of the move yesterday, then the markets are indeed in serious trouble. So we just want to make sure, just keep that in mind, okay? So we want to see a pullback or a slow grind higher, maybe up 10, 20 points, or markets can even rally. That's fine. Don't forget, we are extremely oversold, and one day doesn't make a trend change. Remember, we're still in a short-term downtrend. I'll show that to you in the chart segment. One thing I want to show you also is a crude oil. Crude oil, right now, I wouldn't touch this. We did get that bounce play early, I think beginning of last week. I said you could take this for a bounce play. Easy to manage because we had our support line here, and we came up, and now we failed miserably. Now, crude oil is down over $1 now. I think the next spot's going to be the 200-day moving average. I wouldn't touch crude at the moment. I do think crude does rally into the new year, and it's logically seasonal strength comes in right around the end of October, November, December, and January. Boom. Everybody bought their heating oil. All their petroleum products have been sold, and then crude starts to sell off again, and then into the winter months. And, of course, we get that driving season come in June, and then we start getting a rally again. So you got to know where the crude oil seasonal strength is. And right now, we're not getting a crude oil strength at all. We did get it up here, but I think we're going to lose this. If we lose this, look for the 200-day moving average, which comes in around 99, 98 area. And this is a logical spot. You'll have that horizontal trend line come in right just above that. Okay, so I wouldn't touch crude at the moment. Gold is one of my favorite shorts. It just does not want to bounce, unfortunately. I'd love to see gold come into this 1375, 1400 area. I would just look to buy puts in GLD. And I'll show that to you here. Here's a USO. A lot of guys like to play it. I like to play USO off of the crude oil. And here, you can see here, this is that support area that we had. And the 200-day moving average really kind of coincides nicely with that horizontal trend line, if you can see here. So this is really going to be my spot where I'm going to be looking for the next purchase of crude oil. I do think that crude's going to get hit a little bit, unless, of course, the Syria conflict actually starts to heat up again. Okay, but right now I wouldn't touch crude. Again, and gold. I like gold back up at these levels here. If we can get a big move up like we did here in maybe 1 or 2 days, and it can happen, I would be revisiting gold on a short play. Okay, spiders, here we go. Spiders, we recaptured our fib cluster, 166.60. Big move to the upside. We're still below the 20, but we're above the 50 now. So we are into this area. Now, I would like to see this get back tested here and see what happens if we can back test this area, even kind of test the highs. I think that's a little far-fetched at the moment. Again, this is just a short covering rally. I'm sure there's some buyers that came in, but let's see if what happens here in the next couple of days, if in fact we get a little bit of move to the upside, and then we get the top of this Bollinger Band, which would come in around 170.50, 171.50 to 170, let's call it, and let's see where we go. There's a little gap area to be filled, so right at the top of the gap area is 170, and that's where I'm getting that number, 170, 171 and a half. So let's see if we do in fact close this gap and then see where we go from here. But again, we're still oversold, as you can see here with this big move. So looking to buy pullbacks on strong stocks is really the way to go at the moment. And here is the IWMs. Sold off for 2 straight days, but again, caught that 20-day. We're at the 20-day now. Held up really well here the last few weeks that the markets have been selling off. One of our leaders held up pretty well, but really took a beat in the last couple of days. Now gapped up here. Let's see where we go from here. If we can recoup this 20-day moving average, that would definitely be a good positive sign. Here is the diamonds, the Dow Jones. Caught that 200-day moving average. We had a doji candle, gapped up and ran pretty much most of the day. This was the most oversold index of the 5 that we follow, as you can see here, and it is below the 50 and the 20-day moving average. So this has a lot of work to do. If you're an indexer looking to trade just indexes, for a retracement rally, and I wouldn't get so caught up to being long all the time. For a retracement rally, I would use the diamonds as a buying opportunity on a pullback here. But you'll see all these engulfing candles. We don't want this. If we are getting a pullback today or Monday, we wouldn't want we want to see at least 38%, maybe 50%, but no more than that retracing back of this candle. I'd like to see it, come in right up around here, maybe a point or two off the highs, and then start to rally again. That would entice me to say, hey, you know what, we might be in the mood for testing the highs here. Transportation sector, as you can see, all these indexes, right, following suit. We held the 200. The 200-day moving average. We held the November 2012 low uptrend line. This is almost a year now, guys. This is a big area of support, this trend line. So we need to watch it and pay close attention to it. And, of course, the transport's above the 50 but below the 20. So we need to see this kind of pop up again and move higher as well. But, again, holding up relatively well. Goldman Sachs. Mentioned here with the 200-day, we had that one candle. I said yesterday, let's see if this thing builds. If we get back above this little horizontal support, now the next hurdle is going to be 160. 160 is going to be next hurdle. That's the 20 and the 50-day moving average converging together and crossing lower. So price is moving lower. You can see that you can see this area here. So I like to see Goldman break up to the upside and then start to rally. This will definitely help the bullish case in equities. Let's take a look at the XLF. As you can see, the XLF did break this lower trend line, but regained it, and not only regained the uptrend line, but regained the 20 and the 50-day moving average. Very good sign. Now, the banks are starting to report today, some of the bigger banks. Keep in mind, watch what the banks, listen to the earnings, see how the markets react to their earnings. That is going to be a big factor here in deciding on which way this market is going to go. Are we indeed headed higher, or was this just really a dead cat bounce play and then markets start to sell off again? So keep that in mind, guys. All right, this is going to be important today and Monday to see if we can build on this. Now, of course, if Congress comes out and says, oh, you know what, we're not doing this and that, the markets will just sell off again. Now, yesterday, Obama made a comment yesterday night after the close, around 5:30, 6 o'clock, saying that he's not going to agree to Republicans' demands. The market sold off quick 10 handles. So just keep that in mind. I like to, if you're building positions long term, that's one thing. If you're not and you just want to look to establish something because you think you're going high, I would not be looking to buy anything here. Okay, because until this is really resolved, there's still going to be an overhang on the markets, and the markets do not like uncertainty, as we all know. Okay, Apple, really not much doing anything here, but look, here's what I like to see. I want to see this area get taken out here. This is that little trend line you can see here. You could even call that a little symmetrical triangle within this area. Okay, we want to see this taken out. If we could take this area out, 497, you're going to take a quick beeline shot to the 504 and then ultimately the 520 here, okay? But hold it in pretty good since the market's been selling off. What I didn't like was Apple didn't move yesterday. Okay, that's not necessarily a bad thing, but Apple didn't move, so it's a little bit of a concern to me. All right, lastly is the Qs. As you can see, Tech did well, regained a lot of momentum to the upside. But again, as you can see, of the 5 indexes that we follow, they're all below the 20-day moving average. Most of them are above the 50, but we need to get back above it and start taking out these highs. If the Qs can start really rolling and take out the highs, and Tech, which is doing quite well, the semiconductors, networking sectors, if that can take out that area, then we're in good shape here. Let's see what happens today. Wouldn't look for too much. Not that we can't rally again, some follow-through. Usually markets like to digest the move. Let's see what happens today, but really, ultimately, next week's going to be the big week, Monday and Tuesday. If we can get some momentum to the upside, we're going to be looking for those key areas of resistance, see if it holds. If it holds and we start to roll back down again, that's going to be a good short entry. If not, then we're going to look to buy dips again, okay? But today, I wouldn't expect too much, guys. It is a Friday. We had a big move on Thursday.